Well, good evening, traders and market enthusiasts right around the world. You're here with James on behalf of Pivot Point Trading. I'm very happy, very humbled to be bringing you this Thursday afternoon market recap. Today's trading session has been quite an uneventful day. The net movement itself was very minor. The Dow Jones Industrial Average closed down a whopping, sarcastically speaking, of course, 12 points. The S&P 500 closed positive, actually, 3 points. And the NASDAQ today was up just over 6 points, very close to 7. The actual intraday movement, however, is where it gets a little bit more interesting. We started the trading session somewhat strong. We had a little pop to start the day. However, we saw a very quick reversal. We came back down and retested Wednesday's opening levels. But towards the end of the trading session, once again, the buyers came back into not only the Dow Jones Industrial Average, but the two other markets. And that's what's left us with this very interesting type of daily candle. It's what we call a doji type of candlestick. It's telling us, at least sentiment-wise, that the markets themselves, the participants, the traders, are undecided and a little bit confused with the state of the overall market. They're not too entirely sure as to which direction this market wants to move. That's why we're seeing these upper and lower wicks set up on the Dow Jones Industrial Average. So looking at this, at least on a daily candlestick type of time frame, we're not getting very compelling signals, either bullish or bearish, as to which direction this market wants to move. Now, this is where it gets a little bit interesting. If we start bringing in, other aspects of technical analysis, such as chart patterns, if I start changing to at least the S&P 500, but more noticeably on the NASDAQ, it really looks as though we're starting to set up some form of a bear flag. What a bear flag is actually a bearish continuation. It looks as though we are starting to see the beginning of a bullish pop higher. However, during the flag formation, volume tends to trail off, and we see about a 2 to 3 day rally higher, but we don't break above the long day Morobozu, which moves into the beginning of the flag, but ultimately it resolves itself in the continuation to the downside. So bringing at least candlesticks and of course chart patterns together, it really looks as though we could be setting up what we call a bear flag and a continuation down, or at least to the downside. I'm very open, all right, in terms of that potential setting up. Outside of the actual bear flag, this particular candlestick isn't what we call a doji. This is what we call a dragonfly doji. It's a variation of a doji candlestick, but it isn't necessarily a perfect textbook doji. Again, it is what we call a dragonfly. It's very close to a hammer. You can see that we have some form of a body, but the body itself is so minor. What it's telling us once again is that the sellers came into the market, intraday of course, but towards the end of the session, we were bought back up and we closed more or less right where we opened the trading session. This is a bullish candlestick, but in the context of the overall chart setup, or at least the pattern itself, and of course, the possibility that this is a bear flag, we're still very much neutral on the overall state of the markets. That is the NASDAQ. If I change to the S&P 500, you can see a very similar type of setup. You can see again, if I just draw it on for you, the potential of a bear flag, but today's candle isn't what we call a dragonfly doji. It's more so a hammer type of candle. It's just a variation. The two are very much similar, just one is a little bit stronger than the other, but we are at a support level on the S&P 500. I've been on the phone to a lot of people this week, and I've been making the point that the S&P 500 is down at its relative lows dating back to that mid-August sell-off, that capitulation in the market, which we saw for about 5 trading sessions when we really got into that bearish move. We're back at these levels on the S&P 500. When I change to the Dow Jones Industrial Average, you can see that we are quite away from our 15,638 ultimate bearish push on lower in terms of a price target. So this really once again moves into the aspect or into the thought process that we could be setting up this bearish flag. Again, applying this to the NASDAQ, you can see that we are still quite away from our 4,379 bearish trigger. So I am very neutral on the overall markets. I can make an argument either way. Over the past 3 or 4 minutes, I believe, during this recording, I've made the argument that we are setting up, again, just a bearish continuation. But if we were to push on up higher, at least break bullish, I can also make a very valid argument. My argument for that is that we are at macro support. We are starting to see continued buying pressure by these lower wicks, and the candlesticks themselves suggest that we are going to see a push back on up to 2,000. What I'm going to do over the weekend in that pro analysis class is, again, detail my thoughts more so into probably 2 months, maybe even 3 months into the future. I'm going to break down the intermediate market moves, which we are currently trying to struggle with in terms of an intermediate basing type of pattern, and what to expect as we round out the year 2015. But what I'll do for you right now, I've gone through at least my outlook on the market, at least short term, of what I believe is still very likely to happen. in terms of our trade setups, let me just go through and recap some of these individual trades. Apple at the moment got very close to our target down here at 106.32. We haven't hit it yet, but it is still profitable from a 111.46 trade entry at the moment. And speaking personally, I've closed this trade out intraday today. So I got out towards the lows of this candle. I sort of broke my rules. I didn't get out at my target at 106.32, but I was just happy to put money in my back pocket, of course, and be happy with the trade setup and the outcome from following this Apple trade. At the moment, I would bring down this little stop. I'd bring it down to about 113.70, and I'd just be monitoring the trade. I'd also be looking to get out at 106.32, or if we can push on down around the lows of today's trading session. It looks very, very nicely, or at least it complements the NASDAQ. I made this point on Monday that if the NASDAQ does break this level, and this is a bear flag, then Apple is also going to see some continued downside price action. So that really fits in very much nicely, with the NASDAQ outlook. Let's move into Boeing Airlines as well, because Boeing Airlines, it's really sort of just moved sideways since from really the breakdown, which we saw at 133.24. Again, it's profitable. We're up about $3 off from where the close was today as at Thursday. But dating back to Monday, I mean, this was much more profitable, down at 128. We have seen about a $2 bounce between Monday and Thursday's trading session. However, it is profitable. One thing which I will say on Boeing Airlines is that if you're holding October monthly expirations, you really need to start rolling out of these options. The reason why is because the time decay on this trade, the theta value priced into these options, is going to start eroding the actual price of the option itself. So you're going to see, if Boeing Airlines continues to move sideways, the theta is going to start to rise, and it's going to suck out a lot more of that option value, moving closer to option expiration. Okay, so just be cognizant of that fact. Again, I closed out of my Boeing Airlines trade at the lows during today's trading session, in full disclosure. So I am out of Boeing Airlines. But if you are in this trade, I'd bring my stop right on down to about 132.24. 132.20. You get the picture right here. Just lock in some profit on this Boeing Airlines trade, but I do expect this to move down to 126. What I'll be speaking about over the weekend is a continuational bearish entry on Boeing Airlines, where again we can effectively get into this trade and have some very nice profits if in fact the markets want to push on lower, at least on the Dow Jones Industrial Average and the NASDAQ, make again another relative low to what we saw in mid-August, and then see that bullish rally for maybe 1 or 2 months, moving into, or at least rounding out 2015. So that's my outlook again on Boeing Airlines. Close out if you feel comfortable. Put some money in your back pocket again from these trade setups. They're really, really nice. Let's move into Caterpillar at the moment. Caterpillar has seen about a 2-day bounce from our 64.20 entry. We've more or less closed right where our open is. A very smart idea, a very smart location at least for a stop on this trade, is just above the gap high. So if I change this to a red line for you, and we say to ourselves, well, we'll place our stop at CAT at 67.10. We're in this trade. It looks very, very bearish. It does look as though we are setting up again what we call a bear flag. You see how the volume is trailing off in the actual volume of Caterpillar. This is a very bearish picture. Again, we have a really nice engulfing type of candlestick. It isn't a textbook engulfing candle, but it is a bearish candlestick. And when we change to all of the technicals, we're in a confirmed downtrend. We're breaking support. We've got the exponentials, which are going to act as resistance. My only contention with this Caterpillar trade is that we are exceptionally oversold, but we can remain oversold for really an unknown or indefinite period of time as the trend continues, especially after that forward guidance, which Caterpillar came out with late last week, which really set this continuation gap off and the direction of our trade to the downside. Target on Caterpillar still stands firm, 56.05, give or take a couple of pennies or maybe $1 or $2. So pay attention to that. A really nice trade setup. It looks as though we're moving sideways, but we are ultimately going to break to the downside on that trade. CVX is a very, very exciting trade. I am going to reference this over the weekend. We've got a very, very nice Bollinger Band squeeze setting up, but I am going to break down at least my expectation of which direction that forward guidance, or at least that Bollinger Band, is going to break. Google again looks as though it's setting up a bear flag. Can you see the theme setting up in the market? Not only are we seeing this on the NASDAQ, but we're also seeing it on the on the Dow Jones Industrial Average, but we're also seeing it on a multiple of individual stocks as well. You see this bear flag setting up on Google. Volume is technically trailing off a little bit. We did see a volume spike on the Wednesday, but this definitely has got bear flag written all over it. Doesn't mean that it has to happen, but from our 658 entry over the weekend, or dating back 2 weeks ago into Pro, we hit our first target at 626, came very close to 611. I think at its peak, we were about $41 in the money of intrinsic value, which is looking really good. But right now, we're only up $18 on Google if you're still in it. But that bear flag really looks as though we're going to see that final pushback down to about 611.80. A really nice looking trade on Google. Goldman Sachs had a little intraday push below 170.38. Again, it looks like another bear flag. If you are in the trade, I'd put my stop at about 178.88. This was a technical trade trigger or a hypothetical entry dating back 2 weeks ago. This would now become my stop on the trade if you did take this. And I just keep it at that, as at, or moving into Friday's trading session. I'm going to go through these stocks in great detail over the weekend for you. IBM, again, is really setting up that squeeze. This is what we want to see in IBM. If this continues any longer, we are going to see a highly volatile break when it's time for it to actually break out. Netflix, again, is just moving sideways. You can see why I wasn't very excited about this trade. Simply moving sideways. Tesla, the surprise packet of this week. In retrospect, I really wish I had this trade open in my own personal trading account, but I was very much happy with my Walgreens returns, with my Apple return, with my Boeing Airlines return, and my positioning, or at least my forward-looking expectations on CAT. That was enough for me. That's why I sat out of Tesla. But looking at this, our 251.70 bearish entry, it is now trading at 239.88. So we're up over $10, very much closer to, I think, $11 or $12 on Tesla. A really nice trade setup. I'm receiving a lot of emails saying, look, a great trade. Where do I place my stop? Once again, I wouldn't be playing around with this stock. I'd be more or less, let me just undo that. I didn't mean to do that. I need my support and resistance. I'd be placing my stop about 253.38. I'd be having about $1.70, $1.80 worth of risk on the trade. And I know that my profit target is all the way down at 221. If you ever feel comfortable or satisfied with the amount of profit which you have now, again, a $10 intrinsic move with options is a very large return on investment in terms of a swing trade. You can always exit out of the trade and, again, put money in your back pocket with these individual trades when you feel comfortable. So you can either take money on Monday with this, take it off the table, or you can maybe sell some of it during Friday's session and hold on to a couple of remaining positions down to 220. Down to 221.74. Pardon me, I'm still coughing. I still have that chest infection, that bacterial infection. It's still not leaving me, even though I am on antibiotics. So it's really pain doing these presentations, not because I don't want to, but just because I do unfortunately cough from time to time and I just cannot help it. So sorry about that. But this Tesla trade really looks nice. I mean, in retrospect, once again, you saw that resistance at that 100 simple moving average. We're pushing below the exponential moving averages, and again, the Stokes, or at least the momentum indicators, the Stokes are bearish, the RSI is moving into oversold, and you've got that MACD cross. So it's ticking all of the boxes in terms of a really nice swing trade, and I'm very happy about this for you. So just put in your stop and forget about this. Remove your emotion from the trade. Walgreens Boots and Alliance was a stock which we hit our target on. When was it? It was Monday this week, 82.72, a really good at least target area. We sort of plateaued around this during Wednesday. Today we saw a bounce. There's no trade on Walgreens, just another exceptional trade outcome for us. So I'll leave it at that for this Thursday afternoon market recap. Have a fantastic evening. If you want to join Pro, have a look at that website. Follow the link down below, and we'll have some really great discussions on the market, where we expect it to go, and how that aligns with our top 12 individual trade list as at this week and moving forward, and also rounding out 2015, moving more so into 2016 as well. It's sort of a week-to-week proposition in that pro analysis class. So have a fantastic evening, traders and friends right around the world. I need to make some more calls or additional calls to people. Have a great evening, and I'll see you tomorrow, or at least over the weekend, in that analysis class. It will be recorded and be posted up on our website by first thing Saturday morning for US and Canadian, European, or I should just say Northern Hemisphere students right around the world. So have a fantastic evening and also a fantastic weekend. Goodbye, traders.